why do we need a blockchain stock market? It's probably true to say that traditional brokerage sites, like Fidelity or Charles Schwab, are still more secure and user-friendly than decentralized finance, DeFi, products, and that they have a better and more intuitive user interface. These companies have built up a fortune over the decades and are able to hire the best UI and web designers in the business. DeFi platforms, on the other hand, typically have a smaller team of developers and less funding, as they live on the cutting edge of financial innovation. There are, however, many ways in which blockchain-based financial platforms already offer a more convenient user experience than the brokerage and trading platforms of legacy finance. Buying stocks on traditional platforms takes longer, because everything still has to go through at least one intermediary, for e.g., clearing corporations or the above-mentioned brokerage firms. This means that users are subject to KYC, Know Your Customer ID checks, and additional paperwork, as well as fees and compliance procedures, before they can even begin trading. The blockchain stock market, on the other hand, will eventually be permissionless, meaning that anybody in the world will be able to use it, no matter their nationality, income level, or credit rating. Millennials already prefer commission-free stock trading platforms like Robinhood, where they're not forced to pay intermediary fees or to find the initial deposit for opening a brokerage account, which can cost upwards of $1,000. The reaction to the recent Wall Street Bets incident, in which Robinhood shut down access to GameStop shares, did show, however, that internet-literate young adults value decentralization and permissionless trading, and are being increasingly driven into DeFi when inconvenienced by regulatory overreach. Contrary to the narrative repeated in the corporate media, decentralized platforms, such as a DeFi stock exchange, will actually make the world of finance more transparent, as block explorers, on-chain governance, and open-source code will grant regulators greater insight into what is happening on individual blockchains. Centralized investment banks such as UBS and JP Morgan have frequently criticized Bitcoin and other decentralized cryptocurrencies as being a bubble and a fraud, and HSBC, one of the world's largest banks, has even gone so far as to ban its customers from buying cryptocurrency. But these are the same banks that were accused of turning a blind eye to money laundering, HSBC, and the world's largest Ponzi scheme, JP Morgan. And allegations of tax evasion are so common at UBS that there is an entire Wikipedia page dedicated to the topic. Bernie Madoff, who was once a non-executive chair of the Nasdaq Stock Exchange, racked up over $64 billion in profit over a period of 17 years before this activity was finally outed as fraudulent. Due to these scandals and more, millennials have little to no trust in legacy finance. Emerging blockchain-based derivatives platforms like Injective Protocol, where the platform is governed by token holders and no one group or body can halt a trading pair, are well positioned to benefit from this distrust. Decentralized protocols like this, which allow users to trade blockchain-based stocks around the clock, not only during market hours, which is becoming increasingly absurd in the internet age, are growing in number every day. What will stock offerings of the future look like? On April 8, Exodus made history by becoming the first crypto company to issue company stock via its own native wallet. The Exodus common stock was available 24/7 and not restricted to exchange opening hours. We're pleased to announce that Exodus sold $75 million in shares through a Regulation A+ offering. These shares are currently listed on the Zero ATS, a relatively new digital private security marketplace that aims to simplify the regulatory challenges around private assets, such as company shares. Exodus trod new ground by issuing EXIT tokens, that are digital representations of the shares, on the Algorand blockchain. Exodus shares can also be purchased with Bitcoin, Ethereum, and USDC within the wallet interface. Now, with the Coinbase crypto exchange going public on the Nasdaq, and the first approved ETF in North America, the question isn't whether blockchain will be represented on the global stock exchange, but whether the entire global stock exchange will be rebuilt on the blockchain. The answer to that is, probably. The London Stock Exchange has already built a platform on the centralized IBM blockchain, whilst the Luxembourg Stock Exchange has elected to use the decentralized Ethereum blockchain as a means of distributing funds in a more efficient manner. The future of the stock exchange on the blockchain will likely be both centralized and decentralized, but there's no doubting which of these two camps has the most potential for rampant growth and cutting-edge innovation.
Want to know more about finances? Expand your knowledge. And keep updated to have a strong financial view. We from Brand Fi, your branded finance, offer our loyal subscribers a free financial updates portal with first-hand information on crypto, Web3, NFTs, blockchain, finance news updates and more. Click the link below to proceed. You will get first-class information far earlier than the rest. But there is more you can and should do. Build multiple streams of income. More and more people realize and learn about their finances. They don't know how and where to start. We offer first-class financial information perfect for your needs. Strengthen your financials, get valid and legit information. Click the link below. Become part of our free offers, no financial obligations. But there is one important thing you have to know. You have to become active and involved. So, do it now. Become active and involved. I see you on the other side, Brand Fi.